So, good morning, staff. So let me introduce our speaker for today. It is my pleasure to introduce you all to Pamela Kennie. Pamela is the benefits counselor with University Payroll and has worked in this area for the past 18 years. When she started with the university, payroll and benefits were separate departments. They merged in 2009 to become a one-stop shop for university employees over all three campuses. They're very busy people. Her background is in health insurance, processing medical claims, as well as an added focus on payroll. Her main responsibilities is answering questions regarding employees' benefits, including health, dental, and life insurance. She also assists employees with enrolling in 403Bs and 457 plans. Away from work, she is active in her church, where she serves as the church secretary and usher, and she is an ordained minister. In her spare time, she enjoys checking things off of her bucket list, travel, shopping, and hanging out with friends and family, where she enjoys great experiences and good food. And is at this time is my pleasure that I am introducing Pamela as our keynote speaker for today.
Good morning, everyone. Hope everyone is having an awesome Friday. It is Friday, so we're glad that it is the end of the week. I'm going to go ahead and share my screen here so you guys can follow along with the PowerPoint and the information that I'll be sharing this morning. I do have with me my colleague, Susan Ward. She is here, so she will be assisting. And if you have any questions, if you want to put them in the chat, she can respond to those questions. So Susan Ward is also with me as well. So we'll go ahead and get started. My assignment was to basically to give a refresher of benefits that's offered to university employees. And I believe most of you have been here probably over 6 months or longer. So in that time, there has been some changes that have been made, and then some things have not changed. So I'll go ahead and just talk about some things that's going on that's changed. And again, you can ask any questions. So here, let's get this started. So the helpful links on our, in the PowerPoint, we have the system human resource. I would say this is definitely one of the links you want to keep in your favorites, because it links you to a lot of our benefit information through the university and our state plans and the other vendors that we are contracted with. The My U of I info, that link is the link where you can go in and access changing if you have moved. So it's your address information for mailing and permanent. Also under there, you're able to see some other personal bio information, phone numbers, your address of where you work, and that. The benefits link is basically just the link for all the benefits that I mentioned for state benefits as well as university benefits. And then we have our overview. So if you ever wanted to go back to go through our new hire overview, you can do that at your leisure. We also have on our helpful links our benefits choice booklet for FY 2023, which would be our current year that we are in. And that booklet has a lot of information in regards to the plans that are offered. If you're ever wanting to walk in our campus, our days that we're there in person are Wednesdays and Thursdays from 9 to 3. So you can walk over early in the morning on your lunch or right before we close. You can call us 9 to 4 Monday through Friday. And if all else fails, we do have a UPB service portal where you can submit your emails to us, and then one of our representatives will respond within 24 to 48 hours of your answering your questions. If you don't know where we're located, we're at 506 South Wright Street in room 177. So we're right there on the first floor of the Henry Administration Building. And then that's our local number directly to our office. When calling our office, you could get one of our customer service either from the Springfield as well as the Chicago office, but we all knowledgeable, so everyone will be able to assist you. The first vendor I'm going to talk about is our SERS, State University Retirement Systems. Hopefully everyone has enrolled. If you're still kind of new within 6 months, you have only 6 months to enroll. And if you have not, you want to go ahead and do so. They're located locally here in town, and that's their website. So with the SERS, employees are required to participate if this information is being updated to reflect changes for your employment eligibility and after January 1st of 2023. We do have a link that's on the SERS website. If you need to enroll to review the plan information, you can do so through the SERS website directly. Just so that you remember, neither university nor employees contribute to the federal Social Security system while contributing to SERS. So if you are reviewing your earnings statements, you will see on that there is no Social Security taken, and it's only because we are putting our money into SERS. And we're putting 8% of our paycheck, which is the required amount that we have to put in that retirement account every pay period. Okay, and SERS participants, we still do pay it to Medicare. So you want to keep that in mind. And if you ever want to look at where you are currently with your contribution to SERS, you could go onto their website. You will have an assigned ID number or member number that you can call them and look up that information, and they will assist you with giving you those information. With the SERS, we have 3 plan choices that you can choose from. So it will be the traditional, portable, and the retirement savings. And what SERS is going to do is give you a 6-month deadline. And what they're going to do after your first paycheck came through the payroll, then you will get the mailing. It's going to be a packet that you will complete and mail back to SERS. Many of you should have completed that. If not, you should be receiving that soon here before the deadline. The traditional plan would be the default plan if no election is made. Also, you want to keep that in mind. And again, like I mentioned, most employees are going to contribute 8%. If you work for the fire department or police department, your contribution is the 9.5%. Tier 1 employees is anyone that was hired prior to 2011. You would be considered Tier 1. Anyone after January 1, 2011 is considered a Tier 2 employee. So that information. So next is the state of Illinois benefit information. And this is administered by the State Department of Central Management Services. We call them CMS. They're located in Springfield. We have the third-party My Benefits that's handling all of our benefit enrollments, any changes we make, our benefits choice period where we make our elections. So to be eligible for insurance, you have to participate in SERS along with having a position with an appointment of 50% time or more, or a temporary employee with an appointment of 50% time or more at 9 months, such as a visiting position. And if you're hired for at least 4.5 months, which is 1 semester at 100% time. So for full-time insurance eligibility, that would be a faculty, academic professional, other academics with appointments of 100% for 9 months or longer. Civil service employees with appointment of 100% for 12 months. Part-time insurance, it's important to note employees who work between 50 and 99% of a normal work period. Faculties with an appointment that is greater than or equal to 4.5 months but less than 9 months would be considered part-time. So how do we figure out if you are eligible for insurance? We would take your length of your job divided by 9 Time is a percentage, and that would give us the part-time percentage. So in the example that we have here, you can see the job is for 4.5 months divided by 9 times 100%. And you see this person is 50%, so they would be eligible for insurance. For dependent eligibility, we just want to give you a reminder that your spouse or civil union partner, children can be either natural, adopted, step, civil union partners' children, adjudicated, legal guardianship, ages 19 through 25. They can be married or unmarried, disabled, age 26 and older, other, receive an organ transplant after June 30, veteran adult children, age 19 through 29. The premium is determined by tax status and they must reside in Illinois. As far as your children, once they hit the age of 26, they would be no longer eligible for insurance. So you want to keep that in mind as well. Civil union partner and their children, they are covered. They can be either IRS health and dental premiums are pre-tax or non-IRS health and dental premiums that are post-tax, and the employee will incur imputed income. The documentation that's required, employees will provide digital copies and not originals. So anytime that you're going to have a qualifying event, since everyone here is not new, if you're going to be having a situation where you're going to be adding a dependent, documentation is going to be required for adding a spouse, and that would be a religious certificate, state marriage license, or you can use your most recent federal income tax form. If you're going to be adding children to your insurance, they will accept the state birth certificate or both sides of a hospital record. Documentations for adding a civil union partner, same or opposite sex, and the partner's children, they will accept the civil union certificate. And again, a copy of the state birth certificate or both sides of the hospital record. As far as submitting the documentation, you do have to submit that. If you're having a qualifying event, it's going to be 60 calendar days from the event. The 30 calendar days is only referring to new hires. So if you have the qualifying event and you have to supply some documentation, you get 60 calendar days from that event. The preferred method to get that to My Benefits would be to uploading, because that will be real time and they definitely can see your documentation. You can fax and you can mail. The mailing, of course, would be the longer process. If you do have to submit anything, they're asking for your name, and your CMS issued ID logon should be written on each page. And if you have some special circumstances, there is some dependent types that require some additional documentation, and that link will give you what that documentation would be needed. In the month of May, we have our benefits choice and open enrollment period. And during this time, you can make certain changes to your health plan, add or drop dependents. You will have our flexible spending that would be open. So it's a lot of things going on in that month of May. So they're giving you the full month to make any changes. Now, if you're satisfied with what you currently have at that time, there is no changes that need to be done. But certain plans you do have to re-enroll. It's not going to be an automatic that it's going to start over. So our plan year is a fiscal year, so it starts July 1 and ends June 30. I mentioned about some eligible changes. You can add and drop dependent coverage. Documentation is always going to be required if you're going to be adding dependents on. During that time, you can change your health carrier. You can opt in, opt out of health, dental, and vision. You can decrease, terminate, increase optional life insurance. If you're going to increase the life insurance, it requires a statement of health. Enroll or re-enroll in the flexible spending accounts, the Medicare assistance plan, the dependent care assistance plan, or the health savings account. These are plans that you have to re-enroll. So if you do not re-enroll, you're not automatically entered. I was speaking about qualifying events. So those you get 60 calendar days from the event to make a change. Effective date is typically the date of the request or the event date if selected prior to the event. And some examples of qualifying events may be an employee or spouse change in employment status, marriage, or civil union partnership. The effective date is the date of the event for the birth, newborn, adoption, divorce, and death. And the documentation of relationship of the event is required within 60 calendar days or it will be invalidated. So it's going to be very key with the qualifying events that the documentation is submitted within those 60 calendar days as well. Some other qualifying events that could happen is a dependent loses or gain employment or health insurance. Proof of that loss of gain is required to add dependents. And with that being with health insurance, they will need to see a copy of a letter and not the insurance card of when the insurance ended, along with the name of the person that lost the coverage. The coordination of a spouse open enrollment period, they will need proof of the dates required to make changes. In the case of divorce, copies of the divorce decrees with the circuit court stamp and the judge's signature, and the ex-spouse and their children are not eligible dependents. So in the case of the divorce, it is going to go back to the date that date is on the documentation. So that would go back retroactive. Health plans cannot be changed unless you experience a change in the members or dependents' county of residence or work location where the current carrier is unavailable in the new county. So this would be the only way that you were able to change your health plan outside of that benefits choice enrollment period. So you would have to be moved into a county or living in another residence where your current carrier is not available. COBRA. Upon separation from the university, coverage will end at 11:59 p.m. on the last day physically worked. And after that, insured members and dependents who lose coverage due to certain qualifying events may be able to continue your coverage through COBRA provision. With the COBRA, you will be paying now 100% of the insurance. So there is no longer where the state is covering a part of the coverage and then you're paying the part. You will pay the full amount. So and what they would do is CMS will send you a letter, a notification to your mailing address that we have on file. If you are moving, we're asking you to please update your address with the university as soon as possible, preferably prior to the separation or the move. Employees who opt out or waive the state health insurance are not eligible for COBRA. So if you opt out, there's no way to continue something that you do not have. Next, I'm going to move into the health plans. And members can choose a health plan based on the county where they work or reside. The Quality Care Health Plan, this is our default plan. This is a plan that gives you freedom of choice of providers and facilities. It has our medical, behavioral health services through Aetna. The pharmacy prescription is through CVS Caremark, international coverage for eligible services, and then the Aetna PPO nationwide network. So for more information, you can log on to the Aetna State of Illinois website. With this plan, there are a lot of mandatory pre-certification that needs to take place before having services. And some of those are the hospital admission, including maternity, in-outpatient, diagnostic testing, extended care. And with Aetna, they will apply a penalty if these services are not pre-certified. With this plan, it is a salary-based plan year deductible. And then there are some additional co-payments or deductibles that may be applied to certain services. So some of those would be your emergency room, hospital admissions, and transplants. With the Quality Care Health Plan, it has quality care physician and hospital network. So as long as you are seeing doctors in the network and going to hospitals that are in the network, the plan is going to pay 85% You, the member, will pay 15% after the plan deductible is met. So first, you're going to have to pay whatever that deductible is out of pocket. Then the insurance will kick in and start paying 85%. If you choose to go to a physician or hospital outside of the network, the plan drops down to pay 60% of the allowable charges after the annual plan deductible. And the allowable charge is the maximum amount that the plan will pay for any out-of-network provider for bill services.
Question?
So here's a screenshot. Yes.
On that last screen, so the deductible is, that's a deductible per year, or is that per visit? I'm sorry, I thought I misread.
That's per year.
Okay,
Yeah,
so
no
once
problem.
you pay your
That's an
deductible
annual
for the
deductible.
year. Okay,
Yes, ma'am.
and that's
It's
in
an annual
July.
deductible.
I mean, that's in July, right?
Well,
Or
no,
does it
how it works is the plan starts, your coverage starts in July. So from July to June, as you're using services, if you have, for instance, let's say you have a doctor visit, and the doctor visit is $150, you're going to end up paying that $150 out of your pocket first until you meet the deductible. So if the deductible for the year is $400, the first $400 you're going to pay out of pocket before the insurance kicks in. Once the insurance company finds out you've met that $400 deductible, now the insurance is like, okay, we're going to cover 85% of her bill, and now she's responsible for this other 15%.
Okay, thank you.
You're welcome. So here's a screenshot of what the plan year deductible looks like. And how they come up with these numbers is they go by your annual salary. So whichever category you fall under over to the far left, and then you go over to the right to the middle, that would be your individual deductible that you would have to pay before the insurance starts paying anything. As far as dependent, each dependent will have that $425 per member. So next we have our managed care health plans, which is the health maintenance organizations. We call them HMOs. And under that category, we have our Health Alliance HMO, Aetna HMO. The other two at the bottom will not be covered in our counties here in Champaign and our surrounding counties, the Blue Advantage and HMO Illinois. Open access plans for the counties where we are, we have the HealthLink OAP and the Aetna OAP would be the plans that you can choose from. With the HMO plans, your plan utilizes co-payments for service by in-network contracted providers. Out-of-network covers emergency room only. The PCP, which is the primary care physician, can be changed at any time by contacting the plan administrator. So again, with the HMO plans, they have restricted areas where you physically can go to the doctor. So if you go out of that area, those claims are not going to be covered, only if it is an emergency. And then with the primary care physician, you can change that at any time. If you're not satisfied with the doctor, you're not caring for the doctor too much, or you feel that they're not meeting your medical needs, you can change that at any time. And you would do that by contacting the health insurance company customer service line, and they will update your information to indicate the new provider that you chose. So with the HMO plans, you're just paying co-payments. There are no deductibles. There's no co-insurance. You're just paying the flat amount here that you see on the chart for the services that you may have. After you pay your portion, then the rest the insurance will cover as long as the providers and the facilities are in network. With the open access plans, these are our OAPs. These managed care plan has 3 tiers of coverage. You have Tier 1, the HMO. It requires co-payment, which mirrors the HMO co-payments. Tier 2 is a PPO. It requires co-payments, co-insurance, and subject to an annual deductible. And then there's Tier 3, out-of-network, offers members flexibility in selecting healthcare providers, but involves a higher cost of out-of-pocket costs, high plan year deductible, and a higher co-insurance amount. On this plan, certain services such as your preventative and wellness are not available under Tier 3. The plan pays 60% of the allowable charges after the plan deductible is met. So with this plan, Tier 1 of the plan is just like the HMO that I had in the previous slide. So if your doctor in your hospital falls in that particular tier, you will pay those same co-payments that you saw under the HMO. If your doctor or hospital falls under Tier 2, then it's going to pay according to how that tier is, which means there's going to be a deductible, and then you're going to have co-insurance. And then Tier 3, out of network. So how the OAP plan works is the tier in which the medical provider is contracted determines your out-of-pocket expenses. Employee and covered dependents can use all 3 tiers. So all 3 tiers are available to you if you need to go through any of those tiers. Pre-certification is required for some services or a penalty may apply. I just want to say something about the HMO plan. Now, on the HMO plans, if you want to see a specialist, you have to have a referral from your primary care physician in order to go see a specialist. On the OAP plan, you do not have to have a referral, meaning that you can self-refer yourself to go see a specialist. For example, say you wanted to go see a dermatologist, you saw something on your skin that you're not quite sure, you can call, make the appointment. But the key thing is you want to make sure that, one, find out which tier that dermatologist falls under, because that's going to determine how much you're going to pay at the time of service. It's going to be applied to you once you go to that appointment. But with the OAP plan, you can go to any specialist that you would like to see. It's just going to be determined on which tier that provider falls under. So here's a screenshot of Tier 1 of the Open Access Plan, which is just like the HMO for the visits to the doctor, emergency room, and hospital visits. And here's what Tier 2 looks like. So under Tier 2, if the doctor or hospital falls under Tier 2, you have that annual plan deductible of $300 per enrollee. After you pay that first $300 out of pocket, then the insurance now is going to start paying 90% of network charges, and then you're responsible for the other 10%. The one thing we want to let you know is that the plan year deductible must be met before Tier 2 and Tier 3 plan benefits apply, and the benefit limits are measured on a plan year basis. And here is Tier 3. This is considered, again, out of the network. So when you go out of the network, everything is more expensive. As you can see here, the annual plan deductible is now $400 per enrollee. And now office visits are only covered at 60% of the allowable charges. So again, you want to keep in mind that the deductible has to be met first. And using this out-of-network services, it will significantly increase your out-of-pocket expenses. So if as much as possible, you want to stay in network. And we also have our consumer-driven health plan. This is a high-deductible health plan as defined by the IRS. It's flexibility to choose providers and facilities for services. So the medical and behavioral health services through the Aetna PPO nationwide network, and the pharmacy is through CVS Caremark. With the consumer-driven in-network physicians and hospital, the plan pays 90%, and the member pays 10% after that annual plan deductible is met. If you go out of the network, the plan is going to pay 65% of the allowable charges after that annual plan deductible. And if you're interested in the health savings account, and it continues with that consumer-driven plan, there are some things we want you to know: that the pre-tax or tax-deductible contributions, you have a tax-free interest or investment earnings. There's a tax-free distributions when used for qualifying medical expenses. You may not participate in the MCAP. This is a plan that you must re-enroll each year to continue contributing. You must be covered under a high deductible plan, which is that consumer-driven plan. Have no other health coverage unless it's permitted under the other health coverage, and this is on the IRS website. You cannot be enrolled in Medicare, and that includes Part A. And you cannot be claimed on someone else's tax return. So these are the things you need to know if you're wanting to enroll in the health savings account. So for the FY23, the state will contribute up to 1/3 of the consumer-driven health plan deductible to an active state employee's HSA account. And here are the limits, the contribution limits for those that enroll in this plan. So if you're under 55 as an individual, you can see that the $3,150 is the max you can do. And if you're over 55, it's $4,150. And then as a family, you have your maximums there. Now, unlike the FSA, there's no use it or lose it rule with this plan. Unused contributions remain in an interest-bearing account as tax-free savings that you can use for medical expenses now or in the future. So that's the benefit of having this account. And if you need more information on the link here, you would go to the PayFlex website, because they're the third party that handles the health savings account for the state of Illinois employees. The more important information we want to give you about out-of-network, we're going to encourage you that you use in-network providers to receive the best health plan benefit. Using out-of-network providers will significantly increase your out-of-pocket medical costs. Remember, out-of-network services are reimbursed at a much lower rate if you are enrolled in a quality care health plan, the consumer-driven health plan, and the OAP plans. If you are referred to or choose to see an out-of-network provider, we're going to ask you to contact the health plan prior to receiving those services, so you can be ensured that it meets medical necessity criteria, and to receive authorization to get you a cost estimate before having the services done. So those are some key points for if you go out of network. Next, I'm gonna move on to the healthcare premium charts. So maybe you guys have been looking at your earnings statements to see what's coming out of your paycheck, either monthly or biweekly for health insurance. But if not, this is the chart here that we have where you can see what you're paying. And this chart here is for monthly employee premiums. So you would start at the left where your annual salary is, and you will follow that over to the right to which column of the health plan that you are on. And here's the chart for your dependents. If you have dependents on your insurance, this is the chart showing how much is coming out of your paycheck for one or two or more dependents. If you are a biweekly employee, we do have a screenshot for you. So that's just split in half. So this will come out of every paycheck for biweekly. And this screenshot is the employee premiums only. And this is the screenshot if you have dependents on the insurance. This is added to the employee premiums. Part-time employees, if you ever become part-time or if you are part-time and you roll in the insurance, you pay a portion of the state contributions, resulting in a much higher cost for insurance. As a part-time employee, you can waive the health, dental, and vision coverage through My Benefits. Have an option to elect employee, child, and spouse optional life. For more information on calculating the health and dental, there is a link. So again, if you fall under 100%, but no lower than 50%, you are eligible for the insurance. And here's just a screenshot of an example of a monthly part-time employee and the cost. So this is just a cost comparison between being full-time and part-time. As you can see in this example, a 50% job, and this employee chose the quality health plan, is quite expensive compared to being full-time, paying the $134 for employee only, or if an employee plus one or two dependents. Full-time opt-out. Full-time employees can opt out of health, dental, and vision. Proof of other coverage is not needed when completing a new hire event to opt out. Proof of other coverage is only required when processing a qualifying event for gaining other coverage. You must include the effective date of the coverage, and an insurance card is not valid proof of the other coverage. So in this instance, the proof would have to be a copy of the actual form or the policy with the effective dates and the name of the person getting the insurance. Opt-out elections must be made on the My Benefits website. If you do opt out of coverage, you still can select to have the employee, child, or spouse optional life insurance. Next, I'm going to move on to the prescription plans. Our prescription provider is CVS Caremark. Is our administrator for our quality care health plan, the OAPs, and the consumer driven. You do not see the HMOs on here because they have their own network of prescription providers that you would use. So your card, if you're on an HMO, is a twofold for going to the doctor as well as prescription. The CVS Caremark has a very extensive network of over 68,000 participating pharmacies. That's including the large chains of Walgreens, Walmart, CVS. The network also includes roughly 26,000 independent pharmacies across the country. So you should be able to find someone. So next, with the prescriptions, you have a non-maintenance medication, and in-network pharmacy has a regular copay that's applied. Out-of-network pharmacy, employee pays the full retail cost and files a claim for reimbursement. Maintenance medication, pharmacy network, they have the mail order, and this you will receive a 90-day supply for 2.5 copays. Non-maintenance pharmacies, you would first 2 30-day fills at the regular copay, and any subsequent refills will be charged double the copay rate. Non-maintenance medication will be something that you would take just for a short period of time. It's not ongoing or for long term. And the maintenance medication would be something that you would have to take over a period of time, more than 2 months or 6 months, or it could be more. So that's why they offer the mail order network for you to retrieve the mail order and get that discount for the medications that you need. So members should log in or register with the CVS Caremark website. So you go there and you can register. Members have an access of a list of network pharmacy, mail order forms, and much more. Members also can utilize the inactive formulary list. So then you can compare what you currently have to their list to see what discount you got. CVS offers a special discount with maintenance choice, 90-day supply for medication received at a CVS retail pharmacy or through a mail service pharmacy. So if you need to register, you can go on there and take a look at the meds and see what kind of discounts you have. With the HMO prescription plans, each HMO plan uses the individual prescription benefit manager to administer their prescription benefits. Participants use the health plan network pharmacy, as I mentioned earlier, and then you will contact the individual HMO for mail order prescription availability or if there's any partial reimbursement for out-of-network medication. So that's how the HMO prescription plan works. In regards to the plan year pharmacy deductible for the HMO, each enrollee, there's a $150 deductible. Again, you pay the first $150 out of pocket before the insurance starts paying anything on the medication. So as you can see here on this screenshot, you have the reduced tier. And again, that's for using certain providers to get that extra discount. And then you see the other three tiers. For the Quality Care Health Plan, the deductible is $175 per enrollee. And here you see again, they have that maintenance choice 90-day supply special discount. And that's if you're going to be using CVS pharmacy or the mail order program to get the extra discount. With the OAP plans, the deductible for that plan is $150 per enrollee. And then again, here are the tiers. And then the extra discount is applied again using CVS pharmacies and the mail order. And then you have the consumer-driven plan. Your preventative drugs are at a zero cost. And then you have preventative drugs, IRS allowed, covered at 90%, no deductible. The deductible for prescriptions and medical services are included in your consumer-driven health plan annual deductible. So here's their screenshot of how they're paying for your prescriptions. And as you can see, they give that extra discount as well when you're using directly going through CVS or the mail order. Your prescription deductibles and co-payments all count towards your out-of-pocket maximum from all health insurance plans. So that's something to keep in mind. So when you reach your out-of-pocket maximum, which you will have per year, what happens is that the insurance will pay the rest of your claims that you have at 100%. And that'll, most of the time, if you're pretty healthy, you won't reach that. But if some people have health challenges and have to go to the doctor a lot, they could reach that. So then the rest of the plan year, things are covered at 100%, and then the plan starts over again on our next plan year of July 1. So here is a screenshot of the different prescription plans on this chart. So it's just basically giving a summary of what I just discussed with the Quality Care Health Plan, the consumer-driven, the OAP, and HMO of how the prescriptions are paid. Next, we're going to move on to the dental. The quality care dental plan is through Delta Dental. As employees, we had two options, either opt out or enrolled. If you currently are opt out during our open enrollment in May, you can opt in at that time. An election to opt out or opt in dental is only permitted during your initial enrollment or during our annual benefits choice period. Employees and dependents can have dental only. So if you choose to opt out of health insurance, say in May during open enrollment period, and want to choose just dental only, you can do so. With our dental plan, there is an annual deductible of $175 per enrollee. In network, our plan year maximum benefit is $2,500. So that's the maximum they're giving us every plan year for services. And if you go out of the network, they're only giving $2,000. The plan year maximum for orthodontics plus other covered service will equal that maximum benefit. So the lifetime maximum benefit for orthodontia treatment that start prior to the age 19 is determined by the length of treatment and whether it's done in or out of network. You want to keep that in mind if you have any children that you want to get braces for. And also we have our review of dental schedule of benefits. That list basically shows the actual code, the description of the service, and how much the insurance will pay for the services you've been having done. So that's good reference material. So when you're going to the dentist and you need to know how much it will be for filling, you have to get a root canal, get a tooth pull. All of that information is on that scheduled benefits so you can have an idea of what it will cost you. If you use an out-of-network dentist, you may have to pay the entire bill up front at the time of the service, and then you may have to file your own claim depending on the arrangements that you make with the dentist. Claim payments for in-network and out-of-work dental providers are released according to the claim processing date and available funding that's determined by the state of Illinois. And claims not paid timely will be paid interest in accordance to the Illinois law. So this is just letting you guys know that our dental coverage is funded by the state. I don't know how many of you were here a few years ago, maybe it's been over 5 or 6 years, when the state budget was not in order. It was all over the place. And we did not have funding, meaning that dental claims were not paid on time and people were being put into collections for bills that were not covered. But since then, we have been the state has been able to pay claims on time, and there have not been any issues. Just so you know, all dental, as far as paying providers, that's funded through the state. So we just pray that the state stay funded and all of our dental plan claims are being paid in a timely fashion. And again, if not, they will pay you interest for claims that are not paid. As far as what we're paying for dental coverage, as you can see here on the chart, you have for member plus one dependent, and then 2 or more. And if you are part-time, you will pay a portion of the state contributions in addition to the member's contribution. So you'll be paying a little bit more if you're part-time for the dental coverage. Hearing instruments and related services. As employees, we have $2,500 benefit for hearing instruments and related service every 24 months is available through our all of health plans when a hearing care professional prescribes a hearing instrument, and you would contact your health plan for more additional details. Delta Dental partners with Amphion for hearing health care, and you can either call them or go to their website if services are needed. Next, we're going to go on to the Vision Care Plan, which is through IMED. So enrollment in the Vision Care Plan is automatic when you're participating in the health plan. So with IMED, we have our eye exam, standard frame, lenses, and then contact lenses. We have your in-network, out-of-network, and with IMED, they let you know your benefit frequency of how often you can go and have these services done. As far as our eye exams, every 12 months from the date of service. IMED is very strict on that. So if you don't keep track of when the last time you had an eye exam, you can definitely reach out to them and they will give you the date. So then you can schedule your yearly exam. Your standard frames is a $30 copay and you get up to $175 allowance. Okay. If you go out of network, that allowance is only $70. For frames, every 24 months from the date of service. Vision lenses is a $30 copay. And out of network, it kind of depends on what kind of vision lenses you're needing. Single, bifocal, or trifocal, they give you an allowance, and that's every 12 months. Contact lenses, so if you wear contacts, your allowance is the $120 in and out of network. Again, that's only every 12 months from the date of service. If you are needing some special enhancements on your glasses, member pays all optional lens enhancements. Just so you're aware of that. And then if you do go out of the network, claims must be filed within 1 year of the date of service. Now we're going to talk about the state term life insurance and accidental death dismemberment plan, which is through MedLife. And this is through the state of Illinois. So with our state insurance, employees are automatically enrolled in the basic life equals to the annual salary, provided at no cost to the employee. So currently, whatever your annual salary is, that's how much basic life, term life insurance that you currently have. The insurance is only going to pay out if you're actively still working, then it will be paid out. It's not a whole policy. The basic value of the basic life insurance in excess of $50,000 will be taxed as imputed income. In accordance with the IRS, it is subject to federal and state income tax, CSRS, and Medicare withholding if applicable, and it will appear on your earnings statement as excess life. So some of you may have seen this line because you're making over $50,000 a year. The IRS tells us that you have to be taxed for whatever amount you're over $50,000 of the life insurance. So if you're making 60, IRS is saying we have to tax you that $10,000 you're over. So that's why you see that line on your earnings statement that says excess life. You're paying taxation. Beneficiaries for all benefit eligible employees, you must make those elections online or complete a form. I'm going to encourage everyone on here to yearly check your beneficiaries on any coverage that you have, and that's life insurance, retirement, and if you're enrolled in the supplemental retirement plans, because life happens. Something can happen to one of the dependents that's on your coverage, and you want to make sure you're updating that yearly to remove that person, and you possibly could have gotten married. You might want to add a spouse. So you want to keep track of that to make sure that those beneficiaries are updated. With the optional life, you can get 1 to 8 times it's available. Increasing optional life outside of new hire requires underwriting approval. Optional life elections are available throughout the year as long as a $50,000 value is maintained. Underwriting approval may be required. So if you want to purchase some additional optional life insurance, you can do so. As far as spouse life, the policy is only $10,000 underwriting approval after the guaranteed issued. So at this point, everyone here is no longer a new hire. So if you wanted to add some spouse coverage, you would have to go to underwriting. The child life is going to be guaranteed issued at the time the election is made, and the policy is $10,000 for each child. And again, at the age of 26, that's when the coverage would end. With the state accidental death and dismemberment plan, employee only coverage, You can enroll or terminate it at any time. It coordinates with the employee state term life. We have the basic coverage, 1 times your salary, or you can combine it. You can add some additional coverage to it. Now, with the accidental death and dismemberment plan, that coverage is only going to pay out if there was an accident and you happen to have a situation where there could be a finger or arm or leg or something that was dismembered, or God forbid, if you happen to pass away and it was due to an accident, the plan would pay out. So that would be the only circumstances that this policy would pay out to your beneficiaries. As far as what are the rates for the insurance, the chart on the far left gives the member optional life. 30 and under, as you can see, it starts at 3 cents. And then there's no change in the rates between the ages of 30 and 39. But after that, you see the increase starts every 4 years from that age forward. As far as your spouse life rate, again, the coverage is $10,000. If the employee and the annuitant are under the age of 60, you're going to pay $5.70 a month. If your spouse is over 60, the coverage drops down to only $5,000 and you're paying $2.85 for the spouse coverage. And then as you can see with the child life, again, the $10,000 coverage, 60 cents a month. If you're biweekly, it's 35 cents per paycheck. With the accidental death and dismemberment, there is a calculator that calculates what that cost would be. Depending on how much of coverage you would want to have, it will give you your total. Now, the university also offers an accidental death and dismemberment plan, and it's called the Hartford. With this plan, you can have employee-only and family coverages available. This is another plan that you can enroll in at any time. There are some other benefits that's attached to this plan, which will be the pre-trip and travel assistance, emergency medical assistance, and personal services. You have identity theft. And the third party that's handling this is International Medical Group. And for more information, you can also click on, go to the link for travel assistance. With the university AD&D, the amount of insurance starts at $25,000 and goes all the way up to $300,000 in coverage. You may want to look at your earnings statement. Some of you may be enrolled in this already. Again, you can terminate it at any time. And this pays the same way as the state plan. It would only pay out if something would happen accidentally to you, or if you have family members on it, they will have coverage as well. Power of attorney is highly recommended for all employees to submit a power of attorney document to allow a POA to act on your behalf regarding your personal, financial, and business matters. So you want to consider that if you don't have one set up. Next, we'll move on to the flexible spending account. We're calling them FSAs. This is administered by Connect Your Care. Now it's part of Optum Financial. So that's who's handling our account. With the flexible spending, it's a program that provides an opportunity to pay certain medical care and dependent care expenses with pre-tax dollars. So the contributions are deducted from your paycheck and deposited into an FSA account before taxes that are withheld. So this will lower your taxable income. With the flexible spending account, employees must be eligible to participate in the health plan. So if you chose to opt,
The question is, how are POAs registered?
Basically, they are registered. We will if you submit a copy of it, we will put it in your file, in your employee file. HR probably will have a copy of it. us at Payroll and Benefits will have a copy. So if someone is calling on your behalf and you're not able to speak to us, we will see that that person gets the information. And of course, we will request probably something like an ID to be scanned to us so we can verify who that person is.
Okay, thank you.
You're welcome. So with the flexible spending, you must be eligible to participate in the health plan. An employee paid over 9-month contract, you must notify us directly when you're enrolling. Payroll deductions only. Mid-year changes are required if the election is made within 60 calendar days of the qualifying event. You must have eligible expenses to withdraw from the funds. And this is one of those plans that I mentioned earlier that you must re-enroll each annual benefits choice period. But the medical care assistance plan reimburses you for out-of-pocket medical expenses for employee and eligible dependents. So with this plan, if you enroll, this is money that you're going to put aside, and that money will go towards your co-pays, co-insurance, deductibles for health, dental, vision, prescriptions, and it's also including any amounts that's over the allowable charge for health. Over-the-counter medicines, medical care travel expenses, and the annual maximum is $2,850 per individual. And then there's a debit card automatically issued at no cost. So some of you may be already enrolled in this plan for the plan year, but if you're thinking about it for in May when you enroll, it would be a good time to just take some time aside and do all the co-pays and the deductibles that you will have for each of these areas to see what you're paying out of your pocket. Then you can submit that amount to be put automatically on the card. And if once that information is uploaded and it's on your card, it becomes effective July 1. So once you get your card, you can start using it for those co-insurance, co-pay, deductibles, and services that you will have.
Could you repeat what that is that you were saying that you should upload at the beginning of the year?
Upload what part?
Yeah, you were saying that you should enter some information. I wasn't clear on what you were.
On the medical care assistance plan?
Uh-huh.
Okay. What I'm saying is what you would want to do is do a worksheet, your own personal worksheet that you would sit down and calculate what you're spending for the year. That will give you an indication of how much when you enroll, how much you're going to say, I want to have on the card.
Okay.
So that way, it's going to cover all of your expenses for the year. We've had employees who kind of miscalculated and they were short. And then they ask, oh, can I go and add some more on? No, unfortunately, whatever you submit at that time is going to be the amount for the whole year. So that's why we encourage employees to do a worksheet so you know if it's just you kind of can gauge of how many doctor's appointments you have, who you will see for the year for health, dental, vision, and if you have any certain meds you need to take. Then if it's you, a family, and children, you're going to have to write down what everybody's doing, again, to get an overall account of how much you would need to have for that plan year. And then we have cases of employees that may put in a little bit too much and they go over. They have money remaining, which I'll talk about what happens with those funds here shortly. So with this plan, all eligible expenses must be incurred by June 30, 2023, meaning that you will need to have went to the doctor, had the services done, been to the dentist, went and got your eye exam, got your glasses, any of that. Meds you need to buy, all of that needs to be done by June 30 of this year. Claims can be submitted during the run-out period. So if there are any claims that you need to submit, you can submit those from July 1st through September 30 of 2023 for all services received through June 30, 2023. Some situations you will have to submit a claim, and then there will be instances where you will not need to submit a claim. If you do enroll In this plan, I highly suggest you download the app on your phone or you regularly checking your account because certain information they are going to ask for a copy of a receipt to be sent, and usually you'll get like an invoice statement from that provider as well. That and the receipt, like a credit card receipt, both of those are going to need to be submitted. I do know for dental that they always require for you to submit, upload your receipts. Some vision, depending on what it is, the vision. Dental and vision are the two where they will be asking for additional information. So you definitely want to keep your receipts and submit those as soon as you can after the service so they can start that process. FY 2023 MCAP remaining balances up to $570 will only be carried over to the next fiscal year, which is 2024, if the member re-enrolls. So say, for instance, you've done all your claims, you've been all to your visits, and now you have this $300 that's remaining and you don't have anything else to do. If you don't re-enroll in May of this year and you got $300, you will lose it. So in order not to lose the $300, you have to re-enroll. So make sure you remember that. Anything, if you don't re-enroll, you lose that money and it does not come back to you as a refund. Participants who have an exceeding balance of $570 after September 30 will forfeit any amount exceeding this limit. So if you got $600, $570 is what you can carry over. If you don't use that other $30 to buy something, then they're going to take that $30 and put it to whatever fund they have for people that have money. The state use it for something. I don't know exactly where they put it in what account, but it's used for other purposes. So you want to make sure that you are watching your account. Failure to re-enroll will result in forfeiture of any remaining balance. So if you do not re-enroll again, the state will keep all monies. The rollover provision applies to the MCAP, not the DCAP. And I'll talk about the dependent care plan here. So with the dependent care assistance plan, reimbursements for eligible daycare, nursery, preschool, after school, day camp, babysitter expenses for children through the ages 12. If the child turns 13 mid-year, it's the responsibility of the employee to complete a DCAP change form to stop the deduction, no longer eligible. Daycare, adult daycare for disabled spouse or legally dependent parents, provider social security number or tax identification numbers are required. Services are only eligible for reimbursement when provided during the plan year, which is July 1 through June 30. Services provided after June 30 are not eligible for reimbursement. So with this plan, everything is done from July 1 through June 30. Same process as far as indicating the amount that you're going to want to put in this, and I'll talk about that here. To be eligible for the DCAP, the spouse must be gainfully employed or seeking employment and having an income for a year, or full-time student, or disabled and capable of self-care. Social rules apply for divorced, separated, custodial, and non-custodial parents. And again, for more information, you can contact Optimum Financial for more information. So with the DCAP, the maximum annual amount that may be elected is $5,000 as set by the IRS. And this maximum amount is for the household limit. So if you got two parents that's working for the state, you can split this up however you want. If both parties are going to do the DCAP, or if it's just one, $5,000 is the limit. The monthly limit is modified if university employees are paid over less than 12 months. The DCAP is an alternative to the dependent care tax credit. Please note that if an employee claims the dependent care tax credit, the credit will be reduced dollar for dollar by the amount the employee contributes to the DCAP. So we advise if you have this situation that you discuss this with a tax advisor so they can give you the best advice on how to proceed. The minimum amount which an employee can enroll is $240 per year or $20 a month. Next, I'm gonna move on to some optional retirement investment opportunities. As I mentioned earlier in the presentation, our primary retirement is through SERS, the 8% that comes out of every paycheck that we receive. But the university does have some optional supplemental retirement plans that you can enroll in any time. And many of you may have already started your additional supplemental retirement plans with us. So the plans that we have to offer are the 403B, state, and SERS deferred compensation 457 plans. These are plans that you can roll in at any time. They are payroll deducted only for this calendar year. If you're under 50, the maximum amount that you can do is $22,500, and if you're over 50, $30,000. You may contribute the annual maximum in both a 403B and a 457 plan. With the 403B, the minimum contribution is $200 per year. With the 457, the minimum contribution is $10 or 1% of your pay period. We do have a link for comparison where you can compare the plans to see what's the difference between the plans. With the 403B plan, investment vendors are Fidelity and TIAA. We offer pre-tax and Roth after-tax options are offered. You can do a flat dollar or percent. These contributions are taken from each paycheck. You will start this process with an online enrollment. Both investment vendors do one-on-one phone and virtual counseling. So our office, we do no financial counseling. So if you are needing to speak to someone, you can go ahead and set up an appointment with them, and they will give you some information. Now, with the deferred compensations plans, you have the state plan, which is administered by Empower. The contributions are taken from 24 biweekly and 12 monthly checks. And then there's the SERS, administrator is Voya. These contributions are taken from 26 biweekly and 12 monthly checks. These plans have multiple vendors and investment choices. With this plan also, you can do pre-tax or Roth after tax. You can do flat dollar or percent. The combined annual limit. Enrollment and changes to contributions or beneficiary designations are done on the vendor's website. So that's their number and the website where you can go. Now with the SERS Deferred Compensation 457 plan, here's some important information we want you to know. The SERS Deferred Compensation 457 plan is only available to SERS participants. The SERS Deferred Compensation 457 is a voluntary supplemental plan, and it is in addition to the mandatory SERS retirement plan. So again, this is optional. Next, I'll move on to the long-term disability. With the long-term disability benefits, your primary disability benefits are provided by SERS. So if there's a situation that you happen to become disabled and have to be out, your disability benefits will start with SERS. And the disability benefits may be claimed for an illness after 2 years of eligibility. There's no minimum service credit if it's due to an accident. There's a 60-day elimination period or an exhaustion of sick leave, whichever is later. The benefit is 50% of your base salary or 50% of your average earnings for prior 24 months, whichever is greater. And disability benefits ends when your total payment equals half of your SERS accumulative earnings. So the university has Prudential Supplemental LTD, which is long-term disability plan. This is eligible for you to participate in SERS and are eligible to receive state health benefits. A statement of health and underwriting approval will be required except for during open enrollment period. This is effective the first day of the month after the election with approval. Pre-existing condition limitation after 2 years of coverage. Excuse me one moment, I feel a cough. I don't want to cough. Okay, I'm back, sorry. So the LTD rates. So this is the rate chart to show how much you would pay for coverage. And as you can see, the rates go up every 4 years. We do have a calculator that if you are interested in enrolling, you'll put in certain information and it will calculate and tell you how much for the additional long-term disability insurance. The coordination of CSRS and prudential benefits. Prudential benefits coordinate with CSRS, so the total benefit is 66.67% of your base pre-disability earnings up to a maximum of $12,000 per month. Prudential pays 66.67% in the first 2 years when no CSRS benefit is payable for disability due to illness. Prudential plan benefit starts after a 90-day elimination period for use all sick leave or whichever is later. So to help bring this together for you, what happens is that first, as I mentioned before, your disability will start with CSRS. And with CSRS, they're saying you have to be disabled for about 2 months before they'll start the process for you to use your disability benefits. So once you start getting those benefits and you do have Prudential, and with Prudential, they're saying you have to be not working or disabled for 90 calendar days. Once that period has you been out and working, then you can submit a claim to them saying, I want to apply for my disability benefits. They will go ahead and start the process of what they need to do to see if you're approved or not. If you are approved, I mentioned for CSRS, you would get 50% of your base salary. If you're approved with the Prudential, they're going to add this other 16%. So the total amount that you would get would be 66.67% every month. And the maximum that you can get per month is $12,000. And when you do your enrollment, it shows you on the enrollment of how much you pay and what your monthly benefit would be if you become disabled and you do have to use the benefit. They will tell you how much you would get. Some other additional benefits that's offered, we have a shared benefit. It's a pool that's established which will provide eligible employees who have exhausted all of their cumulative sick leave and, if applicable, vacation leave with an opportunity to receive some additional leave days when a disability claim is pending before CSRS or when a catastrophic injury or illness happens. And we know in some cases, new hires, something may occur, they don't have enough time. And so they may be unable to take advantage of this benefit. But if you've been here over a year, employee must donate to the pool to receive. To donate, employee must have accumulated at least 11 days of sick. 11 days of sick usually take employees about a year. So if you've been here more than a year and you want to donate one of your days to this pool, then you will have an opportunity to take advantage of this. If you're ever out sick and you run out of time, you can contact HR. They'll set you up to receive some time from this shared benefit pool. We also have what we call our My Benefits Plus. This is administered by the third-party core stream. This is an optional benefit program available to full-time state benefit eligible employees. Enrollment during the annual benefits choice period, you're allowed to, if you want, to enroll in the accident insurance, receive cash benefits when an accident occurs to help with expenses. Critical illness insurance, take care of expenses while you're taking care of yourself. They have an hospital indemnity insurance, protects your pockets from pricey hospital visits for you and loved ones, and then legal services. Get access to thousands of experienced attorneys nationwide. Now, those you only can enroll in during our annual benefits choice period in May. Now, these are year-round plans that you can roll in at any time. That would be the group auto and home insurance. You can apply for coverage for your home, condo, vacation property, boats, recreational vehicles, and more. Identity theft, you can protect your identity and your financial information from digital thieves near and far. Pet insurance, you can take care of your furry friends with special discounts. And there's the purchasing power. When cash or credit is challenging, get what you need now and pay for it over time from your paycheck. And if you need more information on this, you can go to the website of Corp Course Stream, and they will give you more information. Tuition and service fee waivers, that's offered to academic appointments of 25% or more, civil service 50% or more, and retirees. Children of current employees with 7 years of service are eligible for a 50% tuition waiver up to 4 years at any Illinois public university. Spouses are not eligible for the tuition waivers. So if you're interested in going back to school, you will contact your campus HR, or you can go to the Systems HR website under benefits, and there's a link for tuition waivers. Employees who take graduate level courses are eligible to receive a tuition waiver, but we want you to note the following. The first $5,250 of the tuition waiver per calendar year is exempt from taxable income per code section 127. When the value exceeds that $5,250, the university will notify the employee of the taxability through email and U.S. Postal Service to your mailing address that we have on file. The university will withhold the required tax from your U of I paychecks, and you can contact our office about questions with the taxability of waivers. So again, with this, if you're taking or considering taking graduate level classes, we are only allowed to give, the state is only giving you $5,250 per calendar year toward your tuition fees and waivers. So anytime that you go over that amount, that's when the taxation comes in and we start taking that out of your paycheck. So you want to gauge that so you don't go over, or if you do go over, it's not a lot. But if you don't watch and continue taking classes, that amount will mount up a lot. And we have seen some employees with a lot of taxation that they're paying because, one, they were not aware, two, they were not kind of gauging what they were taking for the calendar year. Now, the state of Illinois has some wellness and benefit programs, weight loss benefit, disease management, adoption benefits, smoking cessation, employee assistance, and behavioral health services. Time off and leaves. We have our holidays, including the 2 floating holidays that we receive. Vacation or sick leave, you will contact your unit or campus HR. Disability, for additional leave examples, we have family, medical, parental, bereavement, disability, summer academic break, layoff, jury duty, military, educational, and personal. So we have all these type of leaves that employees use or may not use, but they are available. Certain leaves, such as your educational, disability, FML, can be either paid or unpaid. Personal leaves are always unpaid. Some important information we like to remind employees: before you take a leave, we're asking that you contact our office because we will need to know if you're going to continue with the insurance and paying the premiums or not. Because if you go on the leave and we're not aware, you're going to continue to still get billed for insurance, but that bill is going to come directly from CMS asking for payment, and it's going to be billed by the month. So that's some important information you want to keep in mind. There are some other discounts and other services that's offered. Travel discount through preferred vendors in transportation and lodging, relocation assistance with moving companies, computer hardware, software, and accessory discounts, Ford and General Motors vehicle discounts. And once you get on that page, there are more than those two that's offered for vehicle discount. Cell phone plan discount. If you have not taken advantage of that, you can go to the link and apply and get registered for additional discount on your cell phone. Some payroll information. As everybody is already, hopefully, their direct deposit is set up, and you access that through the U of I info or the pay tab, and that's on the Systems HR webpage. Direct deposit updates and changes. I always like to reiterate to employees, if you decide to make a change to your direct deposit or update, please make sure that the numbers that you're entering in for your routing and account number are correct. If a number is missed or transposed, that causes a delay in your payroll. And you guys will call our office asking questions of why my deposit wasn't made. We will ask you to verify your direct deposit information. And if that information is incorrect, then you will need to go back in and update it. And then that delays your direct deposit an additional 3 to 7 business days until that information is updated. I mentioned earlier about your earnings statements. You want to make sure that you do take a look at those. If you're biweekly, I would say twice a month. If you get paid once a month, go in and look at it. You want to look at your what you're making an hour, all the deductions that are coming out your check to make sure they are correct. If anything is missing that you enroll in that was not being collected, because if that's the case, we have a limited time frame that we can work on to make any corrections that need to be made. With the W-2, as you know, we're right now in tax season. Hopefully everyone did sign up to receive it electronically. It's the most quickest way for you to receive your W-2 without waiting for it to go through U.S. mail. If you have not consented, you can consent for this year. And once you consent, you do not have to consent every year. It will stay that you will be able to access that electronically unless you go in and decide you want it to be mailed to you instead. W-4 withholding allowance. Again, that's something I know employees may change once or twice. You want to be careful with that. With the exempt, non-exempt, as far as if you want federal taxes taken or not. We know the wording on the W-4 and the new forms are not like they were in the past, so the wording could be convoluted and you're interpreting that wrong. So make sure if you do change your W-4, review your paycheck after you made that change to make sure it is reflecting what you wanted to do. If not, you will need to go back in and resubmit another W-4 until you see whatever it is. If it's exempting, don't want any taxes taken, make sure it doesn't. But if you do want taxes and it's not, that means you need to go back in the system and read it and resubmit a new form so you can see those deductions coming out of your check. Employment verification, if you happen to leave and a new employer wants to get employment verification, that is an option. The OBFS website, you can look at payroll and earnings and then the payroll schedule. So if you're not familiar with your pay schedule as a monthly or biweekly employee, those pay schedules are available online so you can see actually when you get paid. For those of you, when it's time to go on to the CMS webpage to do anything upcoming, for instance, for the open enrollment in May, and you've never been back on the website since you made your enrollment over a year ago or whenever you went in, this is just a refresher to let you know what you need to click on once going into their system. We will be the very first, the magenta color, the State of Employee Group Insurance, and you will click on the drop down for the state. This here screen is basically for new hires of someone just coming on and they need to register. All of us have our own CMS ID number. It's another 9-digit number that was assigned to us once we got updated in the My Benefit system. So that's another number that you want to keep with you for when you're calling them directly. They're going to ask you for that number. And we already know you have your UIN, University ID number with us. So you have these two numbers that you're going to kind of go back and forth with. So you want to make sure you know which number is for which agency of what you're calling for. So for benefit assistance, so anytime you're going to need some assistance or you have questions about something, you can contact My Benefit Service Center. And again, you would contact them directly when you have questions in regards to if you are making changes to your insurance, when you are doing a qualifying event, adding or dropping someone, they would be the ones that you will call to handle that part. We at Payroll and Benefits, of course, we will be able to look at your paycheck, the deductions, what's coming out, the benefit portion we can tell you about. And then this is our portal where you can email us if you can't get to us through the phone. You can send the email through the portal and it'll be assigned to someone and someone will respond within 24 to 48 hours to whatever your inquiry is. If there's a question or a concern about something happening with your payroll or benefits question. So we are at the end of the presentation. And if anyone has questions in regards to anything that we've gone over, feel free to ask. Also, one reminder I want to give for you is that we had some special exceptions that happened during COVID on some of the plans. So now that we're no longer under the strong restrictions that we have with COVID, you want to make sure you're reviewing your policies and your plans to see what the changes are now. I know with the flexible spending, they had gave a little bit more grace and extended some things to us. Now they've gone back to their normal policy. So make sure if you're not aware of what that is, that you do take a look at that. So at this time, if anyone has any questions, you can go ahead and ask any questions you may have. Am I taking silence that no one has a question?
Or a lot of questions.
Sorry, say that again, Bettswell.
No questions or lots of questions. One of the two, right?
Hearing none.
We're happy to
Okay.
answer questions that you may have, but you can always contact customer service on your individual case if you'd like, and we can answer the rest of your questions.
Well, Pamela, Susan, thank you for a very informative presentation. I know that I felt like this was a really good refresher in terms of reminding everybody of all of the benefits that we have and how to make sure that you are taking advantage of those. And I mean, I know I even saw some things that I had not seen before. I know there is a question if there was any way that we could get a copy of the PowerPoint so that they could click on the hyperlinks as they review. Is that possible?
Yes, actually, our PowerPoint for our new hires, which is a little longer than this one, we just shortened this one and took out some information because it's not new hire, but it is available on our systems HR page. And Susan, are you able to pop that into the chat for everyone? She has it there
I was
already.
working on it right there. So this is the PowerPoint,
Okay, so that
the
is,
most recent version.
okay, so our most recent PowerPoint with the most updated information is there that you can reference at any time. Are there any other questions or comments that you guys have?
I would ask a question. So
Yeah.
my question is, with the state of Illinois retire health insurance, there's it talks about the percentage of your health insurance that is paid based on your years of service. And so every extra year that you work, it reduces the amount you pay by a certain percentage. Is that correct?
Correct, and that your question will be a question that you will need to present to SIRS because they will handle that case by case. So if you're close to that time of your saying goodbye and want to retire, you can make an appointment with them and one of their reps will go through your information and kind of give you an estimate. Like say, for instance, you're talking about retiring at the end of this year. During that appointment, they'll just look at your numbers at this year and say, hey, this is what you'll get as of today.
Right.
But then they can give you kind of like an estimate going forward if you talking about in the next 2 or 3 years.
So my only question was, is if you are in SIRS and another service, do they combine or is it only SIRS years? Or you don't, or do you not know?
They do what they call it's called like a windfall. So they look at if you are in another state plan to see as far as the benefits of what you would get. But again, that would be something SIRS would be able to give you a little bit more detail. We're not that knowledgeable on how that will pay out to you being on another plan. But I know they do have what they call the windfall, where they're looking at if you're in more than one state plan of how they would pay you your benefits.
SIRS website has information regarding your estimated retirement, but we honestly are not SIRS representatives, so we are not even trained on many of those fine details, and we can't see any information within your SIRS records. So that's why we have to refer you to SIRS in that regard.
Right. Well, okay. Thank you.
I've added a few links in the chat as well for the benefit choice booklet, which is usually a good applicable kind of quick run through some of the benefits that they offer with the state, and also the link for the separation prep retirement section that will also get you started and have extra links in there regarding insurance and your other benefits after you retire.
We have a thank you for the links. I'll be sure to stay on for a while so that if folks need some time to make sure that they get all of those links, they have every opportunity to get those. So again, thank you for that very informative presentation. There was lots of information that we can use on a regular basis, lots of tips for making sure that we're aware of how to get best usage of the resources and the benefits that are part of our employment with the University of Illinois. And this is perfect timing because this is the time when you really should be doing the research if you are considering making a change during the benefit choice program, because you have plenty of time now to get in contact, to read what's on the website, if necessary, to set up a time to talk with someone so that you can get all of that information. So with that, thank you, Pamela, and thank you, Susan, for being so diligent about the in the chat and putting information in there for us. I've clicked on multiple things that I now have bookmarked on my site.
Okay, very good. And please give us a call. Again, if something that we said or you like, oh, I got another question about this was not mentioned, feel free to call us and we will get an answer for you.
Okay. So with that, thank you all for being online for our meeting today. Before we adjourn for the day, were there any announcements that anyone wanted to make to the staff? Going once, going twice. I know that Brian sent out information regarding the spring informational, so please make time to look through your schedule and see when you are able to volunteer to represent the office. And with that being it, I will give you all the rest of your time. If I don't talk to you, have a great
Okay.
weekend.
Everyone have a great weekend.
Bye-bye. Thank you.
Thank you.
Right.
Bye.